Greetings. Are we under financial attack? Let's talk about it. So since the pandemic, I've been reading and watching economic and financial news with great interest, like many of you, and on March 27th of 2020, Trump signed the CARES Act, which initially was supposed to be like $500 billion, but by the time it passed through Congress, it had ballooned to $2 trillion. The one-time cash payments to citizens amounted to about 13% of the total, and extra unemployment payments amounted to about 12%. The rest went to small businesses, corporations, state and local governments, public health, etc. In 2021, we had another printing called the COVID stimulus package, which dumped $1.9 trillion more dollars into the system. But here I think there was only 9% or so that went towards confronting the COVID crisis. Then we started hearing about possible inflation concerns while witnessing food prices, energy, utilities, services, etc. starting to rapidly go up. What is inflation? Inflation is a general increase in the prices of goods and services in an economy over a period of time. When there is an increase in the money supply, it can lead to an increase in demand for goods and services, driving up prices. This can be caused by monetary policy decisions such as printing more money or lowering interest rates. The interest rates were already about as low as they could go at the time, so it was the money printing that really got the party started. So the money printing during the pandemic got us into this current elevated inflation cycle. As you can see, 20% of all dollars in the money supply was created in 2020 alone. Unfortunately, this money printing debases the currency or lowers the intrinsic value of the currency. So the money you have in the bank is shrinking in value daily. Essentially, those eggs aren't necessarily going up in price, but rather your dollar is going down in value, and it is reflected in the price of the product or service. Is inflation always bad? Nope. But we'll go into that in a minute. So what do you do now? What do you do when you're getting squeezed by rising prices for essential products and services? Well, you throw your money into assets that grow in value at greater than the inflation rate, or at least keep up with the inflation rate so that you can preserve your wealth. So if the inflation rate is 5%, which is absolutely not, I would say when I did my calculations, it's over 12% for sure, easily. But let's just say the inflation rate is 5%, then you need assets that keep pace or preserve your wealth at 5%, or outpace inflation at greater than 5%. Okay, so you want to get into assets. Well, there are all types of assets. But what are the most common types of assets? I'd say these 5 are the most common types: real estate, stocks, securities, digital assets, crypto, precious metals, and creating a small business. Now, if you had these types of assets before inflation kicked into high gear, you're actually doing pretty well. See, inflation is not always bad, but only if you're in a certain situation. You see, inflation is actually good for those who already have those possessions or these types of assets, because inflation drives up prices of those assets. So the value of those assets will go up dramatically in times like these. However, if you're not loaded up with some solid assets, you're probably really feeling the pinch. Okay, so now you're looking for an off-ramp from those sickly Federal Reserve notes sitting in your bank account, which go down in value every day. However, the roads out of Babylon have not been so smooth lately. Real estate. So interest rates on mortgages have gone up as a result of inflation, which makes it less affordable to purchase real estate. Also, corporations have been gobbling up homes at an alarming rate, which deflates inventory and drives up home prices. So now we have higher interest rates on mortgages and high home prices. So you figure, okay, I can't buy right now because of the interest rates and the home prices. I might as well rent, and that will give me some relief. not so fast. With all of these corporate homes on the market for rent has gone through the roof. Seems they've got us coming and going. So now you say, okay, maybe not real estate, but maybe stocks. Maybe I'll try my hand at stocks. So one of the best ways to hedge against inflation is to invest in stocks, either individual or indexes like the S&P 500. However, the Biden administration has proposed a tax on unrealized gains. Yep. They want to tax you for the stock that you purchased that have gone up in value, but you haven't even sold yet. That's crazy. However, while you have to give them your gains, you are not allowed to write off all of your losses if the stock value actually goes down and you haven't sold it. If you think about it, this is really, really unfair. So this proposal is supposed to apply to wealthy individuals only. However, what usually happens is they will start with the wealthy individuals, and then they'll start to lower the parameter and lower that ceiling as time goes on to kind of get the rest of us into the fold. So now we're saying, okay, what about crypto? Well, crypto is under this proposal also. So the unrealized tax gains would cover crypto. However, in addition to the proposed unrealized tax gains, there has been an all-out assault on crypto companies. Custodial exchanges also are in there, and DeFi exchanges. I mean, they're coming after. The banking cartel via their political minions and the SEC are coming after Bitcoin and crypto with a vengeance. With all the amazing gains in crypto over the last 15 years, and I've been part of that, traders and hodlers have had to be more mindful of how they convert crypto to USD or US dollars and vice versa. So banks via the SEC are putting the squeeze on exchanges like Kraken, Coinbase, Binance, and others. It looks like the big banks want to take over that segment for themselves. Precious metals. Why not precious metals? Well, gold and silver has been manipulated by the CFTC and other financial institutions for many, many years. The price of these assets have been suppressed, and while they were a store of value, they did not come close to keeping up with inflation since the 1970s. Gold actually was stagnant for about 20 years, starting in the 80s. However, gold has had a bit of a comeback over the last 5 years, but still doesn't look likely to beat inflation on a consistent basis, but I guess we'll see. Creating a business which turns a profit is a great asset and the best way to beat inflation and secure your financial foundation, in my personal opinion. Primarily because you have more control over the outcome compared to other investments. They are coming after business, but in a very small way. So there's still a very good window of opportunity with starting your own business. The agencies that are involved are the IRS, Homeland Security, SEC, FBI, with the Congress and executive branches of government. So with all of these efforts happening at the same time, I have to wonder, is all of this coordinated? I mean, could it just be a coincidence that all of these government entities are involved in projects and efforts which happen to make it harder for America's citizens to make ends meet? I don't know. But it sure looks awfully suspicious to me. In my view, we are under financial attack, people. Now, do you think that this is all a coincidence? What are you doing to cope with the rise of inflation? And how are you circumventing this attack? Let us know in the comments section. Thanks for tuning in, and I look forward to the conversation. I'm out.